The Nigerian economy is the largest economy on the African continent and the 27th largest globally. Many people have the perception that the economy is dominated by its thriving oil industry, but in reality, it only contributes around 9% to the nation's GDP. In fact, the country's agriculture, trade and manufacturing sectors contribute more to GDP, and the economy is much more diversified than many may think. Joining me now to give a more in-depth perspective on the Nigerian economy is Dalu Ajene. He is the CEO of Rand Merchant Bank in Nigeria. Dalu, thank you so much for joining me today. Is there a common perception that the Nigerian economy is totally dependent on the oil sector?
I think the perception of Nigeria is always underpinned by what you actually get in terms of formal media or formal, should I say, measurements. But in actuality, I think the perception is accurate on one hand in that, FX revenues are primarily driven from oil. So as such, Nigeria being an oil-dependent country, most people focus on that source of revenue. But in actuality, the country is actually quite diversified, where agriculture continues to play a very significant role in terms of GDP production. The information and technology space is actually booming and growing and contributing quite significantly to the economy, both in terms of GDP and potential revenues in the form of tax. And then there are other areas around manufacturing, financial services, insurance, etc., that are significant contributors to GDP. So the answer around revenue production is primarily tied to FX, and oil is a significant part of that, over 90%, or actually around 80%, and then you look at dividends from the various JVs, etc. But in terms of the production capacity of the economy, it's definitely not oil, where oil has actually been going backwards, and all the other major sectors I talked about are actually going forward and leading the contribution in terms of the 3% growth that we're seeing in the country, or 3.5% growth that we saw in the country.
Which of those sectors are growing the fastest? So where do you see the most opportunities?
So Nigeria printed in Q2 a 3.54% GDP growth. The significant contributors to that, as I mentioned, were information, so the ICT sector, agriculture, manufacturing, and financial services, being insurance and banks. Of all those, we find the agriculture and the ICT sectors very excited. ICT, particularly in terms of telecommunication and the transformation it's had in the economy, to be able to bring both the formal and informal sectors a lot closer in terms of being able to communicate, obviously, via telephony. But now we're seeing a big a shift to data usage. And we know that given where the world is moving in terms of information transfer, a lot of that is happening through data. And we're seeing a lot of uptake in terms of the ICT sector investing in data sources and bringing it closer to the informal sector. We are big participants in that, and we're actually quite excited about that growth. Other sectors are in manufacturing. So manufacturing are key mainstays for us, and we have different categories of manufacturing that we focus on, from industrial to consumer, etc. And then obviously agriculture continues to be a very important sector, but for us as a bank, we continue to struggle to identify those significant formal participants in the agriculture value chain that we can actually support from a bank products and services. The informal sector is a little bit more difficult, but we're actually now seeing aggregators who actually participate in aggregating a lot of that informal sector into the formal sector, and we're also supporting that.
Yeah, the informal sector in Nigeria is absolutely massive, and it plays a critical role in the performance of the whole economy. How does that change the dynamic for potential foreign investors, looking at some of the opportunities you've just mentioned?
I think it's a very important dynamic for people who are not in Nigeria to appreciate. I think the stats that we read, particularly if you're not in Nigeria, is one around the formal sector. I think the informal sector is, if not as big or bigger than the formal sector, and is unmeasured. So the question is, Nigeria has a population of over 200 million people. How much of what you read is actually reflected in that population of 200 million people? I think it's marginal to say maybe 50%. So the question is, what are the data sources that you can get to better measure the 50% gap that isn't actually reflected in what you read. And that's where I think the excitement of the informal sector comes. I think companies and industries that are able to create solutions that actually bring a lot more of that informal sector into the formal sector in terms of utilization and consumption of goods and services are actually winning. And that's an example. We talk around, some of the telecom players like MTN, Airtel, etc., or even banking services or fintech. A lot of that is going deeper into the informal sector and being able to provide goods and services that are valuable and be able to accrete, lower unit, revenue that you can actually get from the informal sector and actually aggregate it in scale.
I know there are many companies around the world looking to invest in Africa, and obviously markets like Nigeria, which is the largest economy on the continent, offers a lot of opportunities. What is the dynamic? How many projects in Nigeria are looking for money, or is it the other way around? Are they investors looking to invest but they cannot find projects?
I think foreign direct investment into Nigeria goes through cycles, right? The structure of the economy is such that it can't be ignored. Being, the largest population in Africa, one of the largest population and exciting, countries in the world, etc. So a lot of that actually plays to, the requirements of a foreign direct investor. I think Nigeria has also been blessed with significant resources that are untapped. So whether it's natural resources, whether it's human capital, whether it's a addressable market, all of those are key fundamentals to foreign direct investments, particularly thinking about Africa. So I think, if you look at things from infrastructure to hard resources, that's commodities, we're seeing a lot of players who actually look through the cycle to actually invest. So gas, oil, agriculture,
infrastructure
products. We'll get to infrastructure. So a lot of that is happening, and you're seeing investors playing that. Infrastructure is of big interest, but how to formalize it and package it in a way that you're actually able to de-risk the project over a long period of time is the Achilles heel. So things around road infrastructure, waterways, etc., continue to present great opportunity in theory. But now the question is, when you invest, are you able to appropriately understand your risk and mitigate them over the long term? Because these are 10, 15-year projects that no externality actually results in your investment thesis going a whack. And I think that's the balance that needs to be played. We're seeing participants in the infrastructure space, and we're actually packaging transactions. Particularly, we just did the Kano Makuradi rail project, which is a significant rail project in Nigeria. We're participants in that, working with partners, both financing partners, DFIs, and contractors to be able to, do the first phase of financing, which we've already done, and then now introduce other sources of capital to expand on that. It's a significant multi-billion-dollar project, and we're very excited to be part of that.
I'm sure there are many renewable energy projects also on the horizon. That seems to be the flavor of every country around the continent, especially South Africa and the bigger markets. Is that a focus area?
I'll say I think we're pleasantly well positioned as a bank to play a very significant role in the renewable evolution that's happening in the country. I mean, RMB are leaders in the renewable asset class, both from a South Africa standpoint and now bigger into the Africa segment. So we have expertise that we tap into. We've also been ahead of the curve in terms of engaging with participants in the renewable space. Most recently, we have Starsight, which is a significant solar renewable project tailored to the corporate client base, which we're funders to. We've also been engaged with Daystar, which recently just got a big investment from Shell. So kudos to them. They're friends of the house, and we continue to look to support them in terms of their expansion strategies. And there are many others. I think the renewable space is one that we're watching critically. But more importantly, we're actually now beginning to engage with corporate clients who are actually going through the transition phase. So we're looking at, sustainable transition projects to advise them in terms of how do they actually meet their stated targets and stated goals. And we're beginning to talk to guys in the ICT sector, in the manufacturing sector, and in the cement sector which are big, should I say, contributors to carbon emission. And we're working with them, or we would like to work with them and begin in the early stages of engaging on advisory opportunities to actually come up with projects and come up with a roadmap to to the sustainability targets that they're looking to implement.
There's been many South African companies who have invested in Nigeria but found it really a tough place to do business. I'm talking about retailers, there's some property companies, fast food outlets, even the Tangoti flour mill was owned by Tiger Brands. Is it a difficult place to do business for foreign companies?
I think operating in Nigeria requires a fair amount of appreciation of the local norms, right? If your business model is one tailored on, torpedoing an external model into the country, then I think it's bound to have challenges. But I think your ability to be able to bring some of your expertise, but to localize it and appreciate the fact that local nuances require a different way of operating and a different mindset in managing your business, then I think those are a little bit more sustainable because they're able to adopt and adjust their businesses to what is required in the local environment. And I think that's what's been some of the biggest challenges from a lot of South African businesses that came into Nigeria. What works in South Africa doesn't necessarily work in Nigeria, but there are elements of what works in South Africa that does work. So you need to have that flexibility to be able to appreciate the local environment, overlay that with some expertise, both in terms of products and services, and then be flexible to adopt until you find a winning formula.
So if there are international companies looking to invest in Nigeria, what do you think are the main issues they need to consider before they take that decision? Or maybe put differently, what do you think are the main challenges they will face when they invest?
So I just mentioned around localization. I think your best bet in thinking about localization is coming up with your best finding your best partners.
Is that where you start?
I think partnership and understanding is key. So whether partnership in the form of investors, partnership in terms of local management that you actually, build a trust and relationship to execute, on your mandate. I think that's one of the key things. I mean, coming in with, should I say, limited perception or limited understanding and thinking that you're going to ramp up your learning curve very quickly is, a recipe for disaster. So finding your local partners is absolutely critical. That's number one. And then number two, I think you got to do your homework. You got to understand what your value proposition is, how is it different, and how can it win. I mean, there should be an appreciation that businesses in Nigeria are not sleeping, right? Just as much as you want to come and innovate and capture a particular, so-called value set or client set, local businesses are also thinking. So one of the true things that you actually appreciate about Nigeria is the dynamism that happens in the business world. I mean, a lot of the businesses are well exposed. They're always thinking forward in terms of their business models. So your ability to come in needs to appreciate that you're not competing with sleeping, giants, but you're actually competing with a very dynamic world where you have to put in your best people to be able to win in the country. You can't put in your B team, you got to put in your A team.
Dalu, thanks so much for sharing your insights today.
Thank you.
That was Dalu Ajene, the CEO of RMB in Nigeria.